This is form number 6. This is the form that allows you to track your expenditures by the various categories on a regular basis. And I usually recommend to individuals that they update this form every day or perhaps every 3 or 4 days and keep track of it. I also usually suggest that if you're married, to have one checking account and one savings account, have one joint checking account, and have all your expenditures go through this one joint checking account. And if you do use a credit card, pay them off each month, and as you pay them, record the expenses to the various expenses as shown here. So I'm going to just give a few examples in terms of the figures. Let's suppose the first thing they do is they pay their mortgage payment for the month, which is $1,013, and let's suppose they give $100 to the Lord's work, and then let's suppose they incur some expenses for food, and let's suppose it's $400, and let's suppose they now come up with an automobile repair, and it's $100. They pay that, and you can see as they disperse these expenses, and you should put them in according to the day. You can see the day each here. As they disperse these expenses, the balance automatically decreases over here. So this way you can keep track of how much money is in your joint checking account, so you don't spend more than you have there. For those expenses, for example, automobile repair, where we do have some funds in the savings account, you certainly should pay it from your checking account, but you can actually transfer money from your savings account to your checking account to cover this. And so to do that, you basically go to form number 4. And in form number 4, you'll see under automobile repairs, we do have $200 there. And so what you do is you key in a minus $100, and what that does there is it takes $100 out of this category, and you can see it automatically transfers that $100 over to the checking account. And by the way, don't forget to physically transfer the funds as well, either through the internet or ask the bank to transfer it when you're at the bank next time. But you see this $100 automatically comes here, and it increases and it now is available for the automobile expense to cover that $100. Next, this couple on the 8th day of the month, they had to make the payment on their personal line of credit, and I meant on their credit card, and that was $500. And they made it on that day, and we've recorded that payment. They've also incurred on the following day entertainment and recreation expense of $150, and they also incurred some clothing expense of, let's say, $200. And basically what you do is you enter into the various types of expenses as they're incurred throughout the month. On the next day, they incurred some house expense. It was actually a house repair of $125. And again, if you recall, house repairs, we do have some money in the savings account that can cover that. So let's go over to the savings account form number 4. If we look under house maintenance, we do have $100. We don't have the full $125, but we do have $100. And so we can transfer that $100 from the savings account over to the checking account. And again, be sure to transfer it physically as well. Don't just transfer it on your form, but transfer the money physically between the bank accounts. And you can see as we do transfer this money, the balance in your savings account calculated here automatically gets reduced, and you'll see that $100 shows up on the 10th day of the month over on form number 6, and here it is there in order to cover this expense of $125. Now in that case, we didn't have the full amount available in the savings account, but at least we could cover the majority of that expense, and we only had to take effectively $25 out of our joint checking account. And this couple just continues to record their expenses as they're incurred. Let's suppose for house expense, on the next day they pay their hydro bill of $250, and a couple days later they pay their gas bill of $225, and then their water bill comes in and they pay $120 on that one. And then let's suppose after that their property tax bill comes in, and it's $550. Now again, if you remember, part of this property tax bill was covered and is available in form number 3 in the savings account. My apologies, it's form number 4, in the savings account. And because we do have some money available there, at least $275 worth on the property taxes, we can take those funds from an accounting perspective from the savings account and transfer it to the checking account. Again, remember to do that physically. And you do that by just simply entering a minus 275 there. And you can see this, the savings account balance comes down. You can also see that the designated funds get adjusted as well. We had 275 that we put in there at the beginning of the month, designated for property taxes. We've taken it out so there's nothing left. And again, you look down here, they have $967 in the savings account, and the full amount of the funds are designated for future purposes. So again, they still have no undesignated funds. So this couple should never think because they have money in their savings account that they can go spend some. All these funds are designated for future needs. So we'll go back now to form number 6, and this couple just continues to incur other expenses. Let's suppose on the automobile side they incur their gasoline bill, and they paid that of $300, and that they've incurred some other expenses, some more entertainment and recreation, perhaps $125, and then they've incurred some healthcare expenses, perhaps some chiropractic bills or something of that nature of $150. Their life insurance premium comes due, and they have to pay that. It's $100 a month. And miscellaneous, let's suppose they incur all their miscellaneous expense of $330 at one time in the month. Obviously, for most cases, they're going to incur that over several times in the month. And that's what form number 6 does. What it effectively does is it tracks your expenditures throughout the month. And often a couple or an individual have to do this, prepare this form for 3 or 4, 5, 6 months to get a really good handle on where their money's going. And by the way, just tracking your expenditures can make you more conscientious of where you spend money. And often we find that the income, the spending rather, goes down. Now you'll see in this case we did keep track of the balance here, so they actually ran into an overdraft. And obviously the only way they're going to be able to fund that is if they have an overdraft privilege or a line of credit. I've assumed that they have that here. Again, it's not an ideal, but at least they have it. So what we have here, that's the end of form number 6. The idea is to track your expenditures. It is best to update this form every 2 or 3 days. And if you have to do some estimates sometimes, perhaps you took $100 out of the bank and you have $20 left in your wallet, and you're not sure where the money went, at least allocate it to somewhere. Often people will allocate it into the miscellaneous categories. If you can track your expenditures within $100 per month, if you can track within $100 of what you're spending, you're doing much better than most.